Hi, Justin King here, Chartered Financial Planner, Certified Financial Planner from MFP Wealth Management, the Retirement Cafe podcast. And I want to talk to you today about some tax planning opportunities you might want to consider as you approach the end of the tax year, which is the 5th of April each tax year. So this time I want to talk to you about if you've made gains in maybe some shares, or some funds, and these are called uncrystallized capital gains. Are there any tax year end planning opportunities? Well, you can use your capital gains tax annual exempt amount to manage the gains that you will face year on year. You have to be careful if you want to reinvest the money after you've made a sale to avoid the bed and breakfasting rules. However, you have an annual allowance, the annual exempt amount of £12,300 this tax year, so that's 21-22. That can be used to mitigate the cost of capital gains tax. This amount can be used for any asset that's subject to capital gains tax, and you pay no capital gains tax on any gain within that allowance, the annual exempt amount. If you have any losses from this year or previous tax years, you must carry those forward first before you use your annual exempt amount. Now, what's meant by the term bed and breakfasting in the context of tax planning? Well, the term bed and breakfasting is used to generally cover arrangements in which someone sells some shares or an asset or some units in a fund, really just to rebase the assets or to make the gain, only because they want to buy back the same class of shares a very short time later, 5 days later, they want to rebuy the same asset back. So the purpose is to create a disposal for capital gains tax purposes, but to regain ownership. And this may realize a loss, which can then be offset against other gains or establish a higher base cost for the asset. Now, the Taxation of Chargeable Gains Act in 1992 stated that if a disposal is identified with the acquisition of shares units of the same class within 30 days, this has the effect of reducing or eliminating the gain or loss which would have arisen if the disposal had been identified with shares already held. So, are there any situations where the bed and breakfasting anti-avoidance rules do not apply? Well, yes, this is the good news. The rules don't apply in a couple of situations. So if you wait 30 days before repurchasing the asset, then that's absolutely fine. If you repurchase non-identical shares or units, that's absolutely fine as well within the 30 days. Maybe you could repurchase made by your spouse. Let's say I held some funds in a Vanguard fund and I sold them. We got the proceeds in. I gave the proceeds to my wife and she then bought those same assets, 5 days later. That's absolutely fine as well. You could maybe sell an asset, a fund or a share, and then repurchase them in an ISA or another tax wrapper within your pension fund maybe, or an insurance bond. Again, that is absolutely fine. No problem. You don't have to wait the 30 days for that. I hope that's useful. I'm going to do a number of tax tips as we come up to the end of the tax year. If you want to keep informed about those tax tips as they come out, press the subscribe button and please like this video so more people like you can find my channel. Thanks for watching. I appreciate it. I'm Justin King, helping you live your best life.